Ladies and gents, Six Figs here from YouTube, and in today's video, we're going to be talking at a super high level about all this crypto regulation stuff. And really, I think I've discovered or just have an idea of what Sam Bankman-Fried's endgame is for FTX. And this includes BlackRock, and this includes Gary Gensler, and it's just all one big shit show. So before we get into all of this, folks, I need you guys to show a little bit of support to BitBoy Crypto and Wendy O. These are the two biggest crypto influencers that are actually talking about this issue on a regular basis. Notice how I said a regular basis, things like that. But we're going to dive into my theory here, and you'll be able to follow these two by just going to the description, pinned comments. I'll throw their links to their YouTube channels there. But Gary Gensler, man, where do I start with this guy? Man, he's like covered in snake oil. And simply because he wants to bring all the same regulations that the stock market has, and he wants to bring all these terrible regulations to the crypto universe. So some of the stuff he wants to get rid of: peer-to-peer lending, peer-to-peer transfer of money or crypto, etc., etc. And we'll get into this in just a second. What I just said there is very important. Another thing, he wants to bring all these same regulations from the stock market to the crypto market, so you could expect to see the pattern day trading rule, meaning if your account is less than $25,000, let's say, you'll only be allowed 3 day trades within a 5-day period. Trust me, folks, this is the type of stuff that is coming. So if you enjoy making trades willy-nilly without any recourse or without any repercussions in the form of frozen accounts, things like that, yeah, you better be afraid of this freaking legislation that's being proposed by like Gary Gensler and Sam Bankman-Fried. Even though Sam Bankman is saying that, hey, I'm backing off a little bit. No, I'm about to make the case that he's not. And when it comes down to all of this, Sam Bankman-Fried, FTX, and BlackRock, they desperately need this legislation to go through where it blocks peer-to-peer transfer of crypto. So with that said, where does Sam Bankman-Fried, FTX, and BlackRock all stand to profit from this? Well, we can see that BlackRock is in bed with Sam Bankman-Fried. In my opinion, BlackRock is one of the most crooked companies on the face of the planet. In fact, Gary Gensler, as the chairman of the Securities and Exchanges Commission, has a duty to protect all investors from market manipulation. BlackRock runs a program made with AI called Aladdin. You should Google it. Look it up. Do your own research. Man, Aladdin manipulates the markets around the world 24/7. It's deployed on every single market there is. And really, the amount of market manipulation going on a daily basis, on an hourly basis by Aladdin is insane. And Gary Gensler just lets it fly. But there's a lot of other big power investment firms that have this AI stuff, just like Aladdin, that manipulate the markets, things like that. So with BlackRock investing heavily into FTX, Sam Bankman-Fried has an obligation now to really pump FTX to an IPO launch position, because FTX is private, right? And the end game for Sam Bankman is to get an IPO. And a couple years ago, you guys remember that Coinbase basically launched an IPO, initial public offering, on a stock exchange. So it's a publicly traded company. And it had a valuation of about $100 billion. And keep in mind, folks, that before this $100 billion happened, there was no regulatory framework or anything like that. BlackRock and Sam Bankman are going to make a ton of money when they go to IPO FTX. It just is what it is. And so with all this regulatory framework in place that are forcing users to conduct peer-to-peer transactions through an exchange rather than from wallet to wallet, this is why Sam Bankman-Fried wants to cancel peer-to-peer transactions. Because he wants all these transactions to take place on an exchange. Right now, the amount of transactions happening wallet to wallet on a daily basis is probably hundreds of millions. Hundreds of millions of crypto is exchanged probably weekly. There's probably tens of millions of transactions happening per day. So this is an untapped money-making opportunity. And if people are forced to make this peer-to-peer transaction on an exchange, Sam Bankman knows they can charge a fee per transaction. So you get a few million transactions coming through a day, $1 a piece. I mean, you guys can see how this adds up. And so that's the importance of canceling peer-to-peer transactions, things like that. Or maybe you could face some sort of repercussion from the government if you do not comply. So man, that's my hot take on things right now, folks. And it just is what it is. I don't trust this guy. He's going to do what's best for him and BlackRock. He doesn't give a crap about you. This is all about putting FTX in the best possible financial position for an IPO launch. And as I mentioned, Coinbase had a $100 billion valuation. What if FTX gets a 5 to 10x valuation higher because of all this regulatory framework and now all this other, peer-to-peer transaction revenue, things like that, man? It'd be an easy case to make why they're worth $500 billion. But it is what it is. So I hope you guys enjoyed this video. Do your own research. My opinion only. So it is what it is. Check out some videos here at the end screens, and we'll see you guys all in the next video.